morning, everybody. It's Thursday, May 23rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, July corn up 2 1/4 at 463.5. July soybeans were up 6 1/4, 1252.5, and July Chicago wheat was down 2 1/4 at 690.75. This morning's export sales report was pretty strong for corn again, 911,100 for old crop, 305,000 for new crop. Upper end of the estimates, we're looking for about 1.2 million. So a pretty solid week again in the corn complex. Soybeans kind of on the opposite end, lower end of the estimates, 279,400 for 23, 65,500 for new crop. They were looking for 275 on the low end of the estimates there. Wheat was 17,900 for old crop. We're transitioning into new crop anyway, so that was 224,900, which would have been higher end of the estimates there. And meal, 145,300 for old crop, 51,400 for new crop. Below the low end there, 200 was the low end of that estimate there. Good morning, fellas. Good to see you. We were talking here quickly before the show. Dustin wanted to point out a couple of things. We've talked quite a bit about corn. Certainly from an S&D standpoint, stocks to use ratios and things of that nature. We've, only briefly touched on the soybean complex. So I think it'd be worth our while to spend a little time this morning talking about beans, stocks to use and what we see there. And then we'll kick it around the room. So good morning, Dustin.
Hey, good morning, Dan. Thank you. I have just a chart to pull up here on this. So we have been talking a lot about global stocks to use ratios and wheat dropping down to lowest levels. If you take out China, just because that data I think is difficult to trust, you take out the Chinese numbers, were the lowest since 2007-8 year marketing year for wheat. I don't have that up on the screen now, but just a reminder of what we have been talking about. And you go over to beans, and it's quite the opposite. We're looking at stocks to use ratio, even with the minus China number, right around 32% projected. Trade war, we see that huge deviation when we take the minus China out. We're left with quite a bit, especially in the U.S. projected at the time. But lowest level really since the last time we were, flirting with sub $10 levels. Highest level rather, stocks to use. So we do think the bean carryout numbers are going to be quite burdensome. And if you actually flip over to like the total usage differences, total usage is going up 18 million metric tons from the prior year just to get to these numbers. So it's kind of like that. If you build the demand or if you build the supply, the demand will come. That's kind of the USDA economists' take in the WASDE reports. It's not uncommon for them to show that. And it makes sense, of course, if we're seeing a lot of excess supply, the market goes and prices itself to try to find the usage and encourage the usage. Right now, you're at a ratio, beans to corn, that is still well above 2.5 to 1. So I think the market is not necessarily treating it that way. It might have been that transfer of ownership that we keep talking about has already happened from grower to end user in the old crop for beans. As we get more comfortable with the U.S. bean crop size and we get through that late June acreage report, if those bean acres grow at all, especially, I think the ratio is something to watch, suspect as high as it is, and that we are overly burdensome on beans, projected to be at least.
At what point does that ratio stop to take place? I mean, we look at that ratio in terms of the economics behind making the planting decisions and things of that nature. But at what point, Dustin, can you see just a deviation from that where it doesn't really matter anymore?
I think we're there. I think obviously no one's switching based on the economics of planting beans versus corn at this point in the season. It's too late. Well, maybe a few, but too late for that decision to be made. It's off to whatever it's going to do, but it's still a ratio to watch because, you think about things like currency, global, recession like 2008. A lot of outside market factors can influence commodity baskets in general. The whole commodity complex is all dollar denominated, and there's certain commodities like beans that have a bigger connection to the dollar because it's primarily an export product, over corn. But at this point, the ratio is going to do whatever it's going to do, but it's still something that we watch very closely because it's outside of the influence of some of these other factors like, global recession or U.S. dollar. If we are trying to have an opinion of one product or the other, it's easier to have an opinion on the ratio, in my opinion, because you're blocking out some of the other noise that causes the flat price move. Rising tide rises all ships. Still, the ratio is going to do what it's going to do based on the changing underlying fundamentals of that carryout. We're looking at right now USDA May WASDE numbers that project, I think, very lofty demand estimates for beans, and rather normal to conservative demand estimates for corn. And we can easily paint the picture where, those numbers, there's still like a feat to be made to get to them. The projection that bean carryout is going to rise, maybe even a little bit faster than the WASDE is showing, I think that we feel comfortable assuming that that's a possibility. And then same thing for corn. It's a long way for corn not to have a drawdown on the carryout. They've got a slight increased carryout at a 181 yield and a 14.8 demand. Wouldn't take much small yield cuts, maybe a slight demand increase because of the, corn's pricing to feed right now. You may end up seeing where corn actually starts to dip down, maybe even below 2.0 for a 25, going into a 25 carry in, again, completely suspect to what we get for weather this year and how those final acreage numbers come in. But if you just take the acreage numbers we have today, I think that the market may be hyper focused on just transfer of ownership of old crop and not thinking about the builds that we're going to see in the beans on the balance sheet.
That's good stuff. Ben, what's on your mind this morning?
Yeah, I think it's kind of a July Nove sort of trade that's going on right now. Rumors of soybean shipments that have not materialized yet. Even at 30 over, that's not really high of what you could see for July Nove historically. And I don't know. I think that the old crop supplies are probably not as tight as the market wants to trade today, but the market's the market. And I think that all of these things that point towards really abundant soybean supplies will play out in time. Of course, you've got to go through making a crop and making sure it's good. And I think there's been a little trepidation on what were the actual losses in Rio del Sol from all of the flooding. We're back up to the top of the range here in July beans, and no beans are about 10 cents off. So that spread has really been, I think, the trade for a lot of people. And all the bearishness that Dustin pointed out to from a supply and demand standpoint, stocks to use, that's going to be, that's new crop, and that's something that we're going to have to deal with. The USDA has been slow to lower exports in old crop. So I think it's an interesting trade, but I think it creates a great opportunity for people that need to get some coverage in beans.
That's a good point. One other thing to highlight. So yesterday, Illinois, down in Southern Illinois, they had a Illinois Wheat Association held their annual crop tour, and they came back at 104.8. So real solid prospects down, at least through the southern part of the state. And I think anecdotally, we've got some clients down that way that have confirmed that things look good down that way as well. Brian, something to add there?
Yeah, no, I was just talking to growers that, if everything finishes off nicely on the wheat side of things and, don't run into any windstorms and it's still standing, it looks like yields are going to be pretty strong coming out of Illinois for sure. So I'm confirming that stat.
Yeah, it's, and I do hope, the next 5 to 6 days, they're calling for some pretty violent stuff down through that southern part of Illinois in through that southern part of the Midwestern belt. So I'm hoping that everybody skates through okay.
Yeah,
You know,
for sure.
get through this little streak here, get some drying. Ben, a couple of things I wanted to ask you on planting progress. Guys catching up pretty quick and getting things wrapped up over by you, or what's going on?
They're moving. They're in a place now where they can get in the field. We've talked about the Northeast Indiana, Northwest Ohio, kind of the northern third of both states, with the exception of probably Northwest Indiana, which has been better than those other places. All those producers are in the field. They're getting stuff in, and there's a sigh of relief on them. So that we will see some rain come through here on Sunday. So they'll be hammered down until that comes again.
That's good. Jace, for kind of Northwest Illinois, across the river, I mean, guys are wrapping up pretty good, right? Maybe just the last 10% or so, but
yeah, you're still seeing field work here and there. I mean, it's getting harder and harder to find a field that's not planted. So, but it's, like I said, spotty here and there. So most of it's, anecdotally looks pretty much done. Guys still, like I said, corners here, over there, but a lot's been done up here.
Yeah, so you'd venture to say that we'd probably see another uptick in getting this thing done for Monday, would be the guess at this stage, right? I mean, it's been a nice little window again.
Yeah, I would think so. I mean, those storm systems that came through, a couple nights ago, kind of tornado watches and all that kind of stuff. But
through Iowa,
those cells were kind of spotty, right? I mean, we didn't get any rain at our house. We were actually sitting outside, me and my wife, and kind of watching the storms on all sides of us. Right. So, I mean, I think that's how storms go in general, right? I mean, some people get it, some people don't. And then you can kind of start picking those spots and getting it done. But, I think we're at a point too, where you just can't wait till it's perfect, and the guys are just going to get it in if they can. So.
Yeah. Cause you're, you're going to be bumping up against final planning dates and stuff like that. And with I'd say, one of your lowest crop insurance guarantees that you've had set for the last couple of years, the economics behind it, you're going to go plant it, you're putting it in the ground.
Yeah. Guys want to plant it. They're going to plant it. You lose 1% of your crop insurance a day after,
final planning.
Final planning, which is what I think, June 1st or June 5th,
still a couple weeks out.
Yeah. So, I mean, you're going to plant, and we've seen that, especially, I mean, it'd be nice to see a price rally, right, to incentivize guys to make sure they plant it like we did in 18. But no, I don't think there's a chance that we don't get it planted. So
no. Well, and it's so funny you talk to folks too. It's if they knew what they knew now, then they would have planted far into June that year in 19 as well. Just nobody knew what was gonna.
Yeah, it's funny, compare the price too, right? Like,
well, sure.
I mean, we only rallied up to 4 something, and that was all the incentive in the world to keep planting corn through June or through July, I should say. It's behind somewhat, right? I mean, we talked about this last few days. It's not as bad as 19. It's kind of, it's not perfect like those perfect years where we're 90% planted by now. And it's, do we get caught up real quick in the next 2 weeks, or is it some of it dragged out a little longer? So it's just start 2 year. That's not perfect, but you look at the drought monitor. If you want to argue the other way, right? I mean, subsoil moistures are completely,
pretty healthy,
right? Filled back up. So I've heard this argument that we get this hot, dry summer coming from these long-term forecasts. But I know years like 2012, we started so dry, and they called for rains. The models called for rains, but there was just no moisture anywhere around to get a cloud to develop, right? So I think it's opposite this year. There's plenty of moisture around. So you would think, outside of a big, and I'm not a meteorologist, but a big ridge that just blocks any kind of pressure from building storms. I mean, there's plenty of moisture around, you would think, to keep raining outside of something big like that happening, I guess.
No, it's gonna be interesting to watch out how it plays out. Rylan, we got just coming into the open here, but we're gonna have cattle on feed tomorrow. We've talked about that a couple days here. 2:00 Central tomorrow. One bit of news: second human case of bird flu detected in Michigan. By all accounts, the individual is doing fine. Looked like it was pretty similar to a case of pink eye, and they moved on. But cattle market's certainly taking notice here a little bit on the open. So a couple of thoughts?
Yeah, a little bit. I mean, overall, it doesn't look like the virus is a huge concern or a threat at all right now to the industry, or just mainly to the public in general. I think that's what the big fear is. But usually you get these headlines and we have a big sell-off. Everybody just says, starts to panic a little bit. But so we'll see how we react. We've been on a really huge rally here. Everybody's pretty optimistic as far as cash goes. But once again, we're coming into that time frame where you get a little bit of nervousness just looking at the potential for a bearish cattle on feed report. Right now, placements, expectations are all over the map. Marketing expectations are all over the map. So we'll kind of see what the reaction is overall, but it seems like this last move has really just been more basis related. I mean, you've got some really good cash prices in the north, 190, 192. The board's still sitting at 184. So for the guys that can actually move out of their hedges here and move those sales to the packer, I mean, it's kind of a windfall right now. So I mean, I think that's what the price action is kind of leading to. And we did see open interest up another 4,000 contracts. So I mean, it seems like we're getting some new buying, we're getting some new interest, just a little bit more optimism, especially with the big discount on the board. It's kind of staring everybody in the face. So we didn't really, at least we're seeing a little bit of better sentiment here too in exports, which were a marketing year high at 17,300 metric tons. Weekly net sales were also up 42% from the previous week. So we're starting to see this start to happen. So, I mean, it seems like this is also justifying the rally and also inspiring some new buying here. And it just looks like the bird flu situation is, even though it's out there, it seems like it's going to have a minimal impact in the long term. So I think everybody's focus is going to be on cash in the report going into the end of the week.
Very good. Appreciate the insight there as always. Just came into the open. We got July corn up 465.5. July soybeans up 9 3/4, 1256, and July Chicago wheat down 1 3/4 at 691.5. Tomorrow's Friday, so we will be with you at 8:15 Central Time. It'll also be Fun Fact Friday, so everybody tune in. You never know what Brian's going to pull out of his hat there, so it should be fun. And as stated, every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day. We look forward to talking to you tomorrow.